ArcherAviation is dropping rapidly, but is this downturn short-sighted? Could this be a golden opportunity to invest early in a company that might revolutionize urban transportation forever? Today, we take a deep dive into ArcherAviation, its recent stock drop, its ambitious plans for air taxis, and whether investors should be worried or excited. Over the past few weeks, Archer's stock has taken a significant hit, dropping from around $12 to below $8. That's more than a 30% decline. The sell-off was triggered by a $400 million capital raise from Stellantis and other backers. But let's break this down. Why did investors react negatively? When a company raises capital, it usually means diluting existing shares. Essentially, issuing more stock, which can lower the value of shares currently held by investors. However, looking deeper, this isn't necessarily a bad thing. Remember when Tesla had to raise capital to ramp up Model 3 production? Investors panicked back then too. Many doubted whether Tesla would survive its early cash flow struggles. Fast forward to today, and Tesla has grown into a trillion company, making those early fears look laughable. Could Archer be on a similar trajectory? Archer's flagship air taxi, the Midnight aircraft, is already making waves. It has a range of 100 miles with a top speed of 150 miles per hour. Designed for urban air mobility, it can fly 4 passengers plus a pilot, making it an alternative to traditional taxis and rideshares. Unlike helicopters, it is electric, quieter, and more cost-effective. And more importantly, it's already in demand. Archer has a $6 billion order backlog, meaning that major airlines and corporations have already committed to purchasing these vehicles, expecting them to become a mainstream form of urban transport in the near future. Archer recently landed 2 major deals that signal global adoption of air taxis is happening faster than expected. 1. Japan Airlines placed a $500 million order for Archer's Midnight air taxis, aiming to deploy them in some of the most densely populated areas in the world, like Tokyo and Osaka. 2. The UAE government signed an agreement with Archer to begin commercial air taxi services by Q4 2025, making Dubai and Abu Dhabi some of the first cities in the world to fully integrate EVTOL technology. These deals aren't just impressive, they validate Archer's business model and show that governments and major corporations are betting on this technology. Is this sci-fi or reality? One of the biggest concerns investors have is regulation. Without FAA approval, Archer's air taxis can't fly commercially in the US, and skepticism remains about when or if the industry will gain full approval. But here's the good news. Archer is already in Phase 3 of FAA certification, the compliance training phase. Phase 3 ensures that the aircraft meets all safety and operational standards. The final Phase 4 is for full implementation, meaning that at any moment, the FAA could grant Archer the green light for commercial operations. Imagine this. You're in the Hamptons and need to get to Manhattan. A car ride could take 2 hours, with heavy traffic on the Long Island Expressway. Instead, you book an Archer Midnight flight and arrive in just 30 minutes. That's the future Archer is building. And it's not just New York, Tokyo, Dubai, Los Angeles, and other major cities are working on integrating EVTOLs into their transportation networks. Why are air taxis necessary? As urban populations grow, traffic congestion is becoming a major economic and environmental issue. The average New Yorker spends over 120 hours per year stuck in traffic. In cities like Los Angeles, rush hour can double commute times. By 2028, cities are projected to lose over $300 billion annually due to traffic congestion. Air taxis solve this by reducing travel times, lowering emissions, and creating a new, efficient mode of transportation. Can Archer be the next Uber or Airbnb? If this all sounds too ambitious, think about how people reacted to Uber or Airbnb in their early days. Trusting a stranger for a ride seemed absurd. Letting someone stay in your home was unthinkable. Yet today, Uber and Airbnb are worth billions and are part of everyday life. Archer's air taxis could follow a similar trajectory, reshaping how people think about travel in major cities. Despite recent volatility, institutional investors are pouring money into Archer. $436 million in institutional capital flowed in last quarter. Analysts project $34 million in revenue for 2025, with a potential 40% upside in stock value. Archer trades at 230 times forward sales, a sign that investors believe in its future growth. Even though the company is still pre-revenue, Phase 4 FAA approval could unlock billions in revenue and drive massive stock gains. What are the risks? 1. Regulatory delays. FAA approval is essential. Any delays could impact timelines. 2. Safety concerns. An accident could trigger panic and lead to stricter regulations. 3. Execution risk. Scaling manufacturing is complex. Delivering on orders without production delays is key. But consider this. In 2008, Tesla was on the brink of bankruptcy. In 2010, Uber was laughed at by traditional taxi companies. Today, both are industry leaders worth hundreds of billions. Archer might be following the same playbook. Should you invest in Archer? Archer is at a critical inflection point. FAA approval is imminent. Global adoption is happening now. Institutional investors are backing it heavily. While there are short-term risks, the long-term upside could be massive. Are air taxis the future, or is this all just a fantasy? Would you invest in ArcherAviation? Drop your thoughts in the comments below. And if you enjoyed this video, make sure to like, subscribe, and hit that notification bell so you don't miss our next deep dive into the future of tech and investing.